I've always heard if your CPA sounds like they're working for the IRS, you probably shouldn't hire them.
Yeah.
Which is always a funny statement. But I interviewed somebody that sounded like they were working for the IRS where I was like, can I do this? They were like, no. They were like, I was like, can I do this? They were like, no. And I was like, this is not going well.
Yeah.
I was like, I feel like I can justify that this is actually business.
Yep.
I interviewed a guy on the other side who was like, if you buy something for your house and it sounds like it could go in your office, then, go ahead and expense it.
Yeah.
But it's just interesting. And I have a patient right now who's a CPA. And I was asking her this, and she was like, yeah, I mean, it's really kind of how you interpret it.
Exactly.
And it's so subjective.
Yep.
That after a year of doing it, it's just wild. Like I was looking for such a black and white. There's none.
Yeah.
There's no black and white on it.
It becomes a gray area, and you just don't want gray areas when it comes to the price of your business. And if there is gray area, they're just going to say no. Like you said, like if you're running the business from your home and you buy, 10 grand of office. Here's a perfect example. There was a business that I looked at 2 years ago. They ran it from their house, and they had done a renovation in their home office, right? So that went under the P&L for business, but it was also business that was ran from their home. And so can you add that back? Do you not add that back? And yes, they have the receipts for it. And then they've got, an office supply expense item, and, you buy things for your home, you categorize it as office supply. And now we got a gray area. Can we actually add this 10 grand back? Do you have receipts for it? Oh, that was for your living room. That wasn't for your office where you work and run your business out of. You know what I mean? And so it's just when you don't have set in stone receipts for the expenses you're running through your business, it just drops the price of your business.
Yeah, it is such an interesting.
But nobody knows
thing.
that. You know what I mean?
Yeah.
And so they're like, I'm ready to sell my business. And you look at their tax return and you're just like, oh no.
And if you go to the CPA side of it, I mean, if you follow any of them on Instagram, the 6,000 pound rule for the car. If you've had a good year, go buy a G-Wagon because you can write off the full thing in the first year. Yeah. I don't know if you see that on clients of yours, but it's like, I don't know.
It's good. And that's the thing is I'm not a CPA.
Right.
It's good tax advice, sure. But all I'm saying is if you're planning on selling your business, it's not good for the value of your business. So as far as saving on taxes, that's the CPA's job. They saved you on paying taxes. Great. But now when it comes to selling your business, it's going to hurt the price of your business.
Would you have the same advice for someone that is selling a business and say they're 62, they want to retire at 65, and at 63 it goes down 15%, and at 64 it goes down 15%, and you have this sort of downturn? That was one of the biggest things that the bank was saying to me was the value that the broker and seller thought it was worth and what I was trying to offer was significantly different because the bank was saying, we're seeing a downward trend, not an upward trend like you should see with most businesses. Mm-hmm. What do you recommend to someone that's 62, they want to retire at 65, and you don't want to see a downtrend? I mean, you recommend just hold steady, get out now?
Downtrend in their revenue, in their sales. Yeah, that's tough because you do want to see year-over-year growth, but it's not that it prevents you from selling the business. I mean, as long as the cash flow is enough to pay off the debt, you can get it through a bank and someone will buy it. But it's just one of those leverage things where, hey, your business is going backwards. I don't want to offer that price, and so you just want to have as much leverage and ground to stand on when it comes time to sell your business, and showing year-over-year growth is the best. I mean, it's the same thing as stocks. You want to sell when you're high. So when you want to sell when you're growing. I know it's hard to do, but that's when you're going to get the highest possible price.